industries on the guy.
Money.
With the least.
Money. 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 Hello and good morning and welcome to the show this morning on Money FM. We are live on Behind the Markets. I am Munyumba Mutwale and I have been joined by...
I remember that, of course, we do have this welcome to Friday. Thank you so much for those, of course, who've managed to join us for the day today. Joining us, of course, with more conversations. Hello, how are you doing today?
I was actually doing it
I'm not sure
online.
if you're able to hear me.
Yeah, I'm able to hear you. I was actually doing it online. It appears that you were doing it on
I'm able to hear.
Sorry, Bernard. I think we cannot hear you.
From Mutwale. Okay.
Sorry, can you hear me now?
You can hear me or you cannot hear me?
I can hear you very clearly, Vernon. We can all hear you very clearly.
Okay, great. Thank you.
All right, so let's get back to business here. Thank you very much, Brendan. I think we just lost you for a second. It is Futuristic Friday, and welcome to everybody who is joining us today on Behind the Markets. I think there was a little bit of a collision course there, and we'll have our online audience joining us very soon. Give us a shout out where you're joining us from, name, number. Well, not your number, but just your name and everything. Vernon, how are you doing, my brother?
Fantastic. We're doing great. I'm looking fine and good. How are you?
You've even upgraded to looking fine. This is what we call confidence, my brother. This is what we call confidence.
How are you doing yourself?
No, I'm good, my brother. So we're doing one quick checkup on the latest on the money. As Money FM, we have to track how people have handled their money. And latest news that has come out from National Pension is that 58,899 people have gotten their total claims, their pre-retirement lump sum claims, to a total of 1.95 billion kwacha.
That is a lot.
You know, this thing happened like 2 weeks ago, by the way. You realize this thing is only like 2 weeks.
Yes.
Zambians have collected 2 billion kwacha in less than 2 weeks. My goodness. People, when there's money available, people went and all rushed for it. No, it's just quite interesting to see the quantum of people that have gone to go and collect this, that have gone to go and get the money. The question, my only concern, Vernon, is not really whether it's not whether or not people should get the money. It's one. Well, the first one I have is, do they have the credible plan to utilize it? Because this is a single withdrawal. It's the only one you're going to get. Because I can already foresee what's going to happen. 5-10 years from now, people are going to get into pressures again, and then they're going to turn around and say, "No, but government, give us another withdrawal. It's going to be give us another withdrawal, give us another," until they end up just wiping the thing out. Okay, this is what's going to end up happening. Unfortunately, the single withdrawal has opened Pandora's box. This is why the first time I had suggested things to do pertaining specifically to NAPSA, my suggestion was, maybe at the beginning we restricted to entrepreneurship and education. Like, we just restricted to those two. Like, it should be restricted that, okay, look, come up with a business plan and then you can go to a bank and use your NAPSA. As you know, that was the deal that I was kind of looking at. I know that the problem, like I said, I know that right now the president and his team mean well to say, okay, let's just give them access to 20%. They should be able to have the 80%. But what they don't understand is now you've given people a taste for getting a withdrawal. Now they're going to demand it as the next political problem. No, as in people are the maturity levels that we have in our nation are not that high where we can say, okay, we've used up our withdrawal. Let's go back to trying to do things properly. We are all going to rush and say, no, no, no. Whoever's offering us unlimited withdrawals, that's who we're going to vote for. And still giving us a pension at the future. That's where my worry is going to come, because people are going to start saying, no, 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 just give us access to it. Then when they've got nothing in their retirement, which a lot of people do, by the way, a lot of people end up having nothing in their retirement. And you know what ends up happening, Vernon? They end up now crying to the government to put them on social security schemes, on safety net programs. We start hearing people, no, give us farmer input support to help us return to the land. No, give us social cash. No, give us this. No, give us that. All of a sudden, the bad decisions, the problem is politicians are always the way to exit your bad decisions. Okay? Now, I say it again. It's your money. You withdraw it. The only thing I ask of the people of this country is live with the consequences. That's all you're being asked to do. You're not being told if we were mature enough to live with our consequences, probably even this whole NAPSA would be available to you.
Mm-hmm.
Because in the US, as long as you switch jobs or anything, you can withdraw your pension. You can withdraw from your 401k. You can borrow against, you can do everything. It's voluntary. You are free to actually draw from your pension whenever you feel like it. If something has happened, maybe you're in between jobs. But you know what they find? The majority of people, Vernon, don't. Because in Zambia, pension is a statutory requirement. In America, pension is a culture. That's the difference. Okay. When something is a culture, people do it regardless of whether they are told to or not. It is something they voluntarily do. When it's a statutory requirement and you open up a little window for a withdrawal, then all of a sudden, this is going to become a campaign issue every single year. I mean, every single election.
Yes.
I'm telling you, this is going to become a campaign issue. I will not be shocked if this current president, to try and get a second term, has to offer a second withdrawal. I won't be shocked if that ends up happening. No, because this is what's going to end up happening. Okay? Around election time, people are going to start saying, no, president, if we're going to vote for you, we need another withdrawal. We need another one. And every election is going to be opening up for another withdrawal and another withdrawal until by this time, Vernon, people are withdrawing 80% of their NAPSA. That's what's going to end up happening. That is actually what's going to end up happening to people every single time. And that is not going to be a good habit as a nation. Unless we get into a culture where people are able to withdraw their money and use it properly. This is why I said we should have put guardrails on use, but you know what? Let's get this out. Let's learn how people are going to utilize it. Because I'm telling you, Vernon, 1.9 billion kwacha entering the economy off the financial system back into the consumer's hands. If that money is spent, the inflation it's going to cause, okay? That's like a billion kwacha being injected back into the economy. That's like the central bank printing 2 billion kwacha and shoving it into the economy in 2 weeks. Okay, that has lots of inflationary impacts, because here's the reality, Vernon. Inflation is literally what happens when there's too much money chasing too little things. That's what everyone needs to recognize. So in a couple of months, everyone's going to be crying about inflation. There's been a lot of cash injected into the system over the last 5 months, over the last 3 months, actually. We've had 3 billion kwacha worth of dismantled arrears. We've had 2 billion kwacha worth of pension, 1.95 billion, 2 billion kwacha worth of pension payouts, and 700 million kwacha worth of Zambia National Provident Fund payouts. So if you kind of look at all these things together, we're getting close to about 6 billion kwacha having been injected into this economy over the last 3 months, last 3 to 4 months. Now, 6 billion kwacha going into consumer hands and business hands is going to be majority spent. And that can either drive down the currency, that can either boost up the cost of things. Because if we don't have the productivity, if that money does not go to improved productivity, this is why you have to utilize that money for economic activity and not for spending. You know why, Vernon? If we utilize it for things like educating ourselves so that we're more economically active, starting more businesses so that we're increasing the supply side of the economy. If this money goes majority to those things, then the prices of things can come down because there's more economic offerings happening. But if that money goes to consumption, it's going to drive up the demand for everything. More money chasing milli meal, more money chasing cars, more money chasing dollars. All this money chasing things is going to drive the price of things up. Okay. And then the same consumers will be weeping and gnashing. They'll be weeping, gnashing, and moaning of teeth about how the price of things have gone up. But government, where has this come from? I don't know. Maybe you all withdrew 2 billion kwacha at the same time and spent it. Okay. But perhaps think of this is what I'm saying. We need to make sure people are economically literate to the circumstances that they may
Yeah.
occur. Everyone's going to say it's their money, spend it. Cool. But when inflation hits, remember it's your money and you spent it. You didn't look at how to utilize it for economic growth. You looked at it for spending. Okay. I understand the situations, but I say it again, Vernon, live with the consequences. That is what our country
Yeah.
needs to learn to do. We must learn to live with the consequences, okay, of things. I'm just giving people a heads up here. So I am out. Like I said, it depends. Like this is a huge cash injection. Okay, it's a huge, very quick cash injection into the hands of people, and people should brace themselves for potential inflation. They should, because we haven't produced as much food this year as we should have. We're not producing as much business wise.
Yeah.
Hopefully, this will go to good startups. If it goes to startups, if it goes to business growth, if it goes to enhancing someone's productive capacity, then we will see the good side of it. And if the Zambians utilize it incorrectly, we will see the harsh side of it. Okay, because let me
Yeah.
give you a simple example. Let's say you've got a bunch of suppliers who have been paid out of that 3 billion kwacha. You've got a bunch of suppliers who have been paid. Those suppliers maybe had to import things, but they haven't paid the full bill out there with their import partners. Now what do they do with that 3 billion kwacha that gets given to them? They go to the bank, they exchange it for dollars, and they buy 3 billion kwacha worth of dollars and pay their suppliers. Do you see what I mean?
Yeah.
So what do you think is going to happen to the dollar if 3 billion kwacha chases after the limited dollars that are in our economy? The FX rate will go down. Then we're going to have the currency will get weaker. Then we're going to have issues in our economy again and again and again. So I want people to understand the implications of this, because this is fast. But no, as in seriously, Venom, you don't understand. Last week we were at 270 million kwacha. Sorry, 230. We were just at 230 last week. Okay, last week. About 10 days ago, we're 230 million. Okay, we have this number is going up fast, like
Really
really
fast.
fast. Like we've had 600 million of withdrawals in the last 2 days. 2 days. Okay, that's 300 million a day now. Okay, cash getting into people's hands straight. And now what we've got is a situation where the two biggest banks in the country, I think it was ABSA and Zanaco, have actually now partnered with NAPSA to come together to now try and help speed up the process. So this is why whenever if you go to
Yeah.
a bank, like I think I was at Zanaco, the queues, Vernon, the queues, they're coming out of the bank. Okay, people are now going to open. So banks are utilizing this as an opportunity to get people to open bank accounts. So now what's happening is that because this is now a
Yes.
prerequisite, you
Yes.
have to have an active bank account for you to be able to receive your funds. So now these banks are going to speed up the process. So that amount of liquidity hitting the economy is similar to the central bank printing money and injecting it into the economy. This is literally, it's as if the central bank just printed money. And I'm not saying the central bank has done it. I'm just saying it's as if it's equivalent to the central bank printing money and just handing out stimulus. But in fact, the same way I think the Trump administration did it, where they just issued stimulus checks into the economy. Look at the inflation it's caused in America for the last 2 years. When $2,000 was just given to everyone in the US economy, I think it was just twice. They just gave money to people. That money went and pumped its way into the economy indiscriminately. That money went and pumped its way into the economy and created stagnant inflation, which the Federal Reserve has had to be fighting up to now. Okay, a year of fighting inflation for the American economy since 2020, since March 2022. They've been fighting inflation, okay, viciously because they basically pumped cash into the economy. Remember, people, that's exactly what we've just done now. I think for me, what's worrying is the speed at which the money is coming out. I'm not saying they shouldn't be paying it out fast. I'm talking about the speed at which people are withdrawing. It's rapid. Okay, this doesn't look like methodically thought out business ideas and education. It doesn't look like that. It looks like spending. Okay, and have you noticed, Vernon? Am I the only one who's noticing that those withdrawals speed up next to Fridays, like Wednesdays and Thursdays? Have you noticed these withdrawals speed up really fast around Wednesdays and Thursdays leading into Fridays? People, there are not many people who receive money on a Friday and keep it. There are not many people who receive money on Fridays. Friday is a day of excitement. Okay. But anyway, I've just put that out there because like I said, that is a concern as the speed of it. But to the people out there, please use it wisely, eh? Use it wisely. The rest of us, I think we just have to figure things out. My advice to most people, Vernon, is hold it off between 40 and 45. That's my advice to most people. The reason is you actually get an optimal withdrawal if you hold it off between 40 and 45. And also, Vernon, when you're between 40 and 45 or 40 and 50, the now, have you seen our tech guys? Lucky, can you please stop? Can you please stop encouraging bad behavior? Yeah, let me put this guy's comment up. This is our tech guy, Lucky. Look at what he's gone and said. Okay, we're following. We are following as we prepare to visit NAPSA in injury week for this month. You see this behavior. You see, this is what we're talking about. This is exactly what we're talking about. No, but the point I'm trying to drive at here, Vernon, is that my biggest my only my advice to many people is between 40 and 45. One, at between age 40 and 45, you're at your most mature, or even 35 to about 45, you're at your most mature, and your decision making is usually long term. By that time, Vernon, you've got a family, you've got children, and usually, and I've seen this before, family changes people's horizons of thinking. I've noticed this. And I've seen it with, let's say, child education savings plans. These days, and I'm telling you, I'm convinced that the insurance teams are sitting in the maternity wards of the hospitals of Zambia, because the moment women are giving birth, they're just handed a pamphlet for a child education savings plan, and they just start enrolling their children in it, and it's actually quite interesting. I've really seen people do this. So what's really getting to this is, for me, like I said, the trigger point here is that when people have family in their 40s, I've seen that between 30 and 45, you've noticed that their decision making starts becoming more long term. So when given a lump sum, they start thinking about long term things. Now, most likely things like school fees may take a hold. But what I'm just telling you is that there's more long term issues that you'll probably find out and about. If you are a parent, however, here's one thing I would advise. If you're a parent and you're trying to get your child into college, this would be a good way to withdraw that amount, possibly around your, if you've got a child, you've got children around age 10, withdraw it and invest that money into a child education savings plan. It would actually be a good idea to do that, by the way, so that it can start earning and gaining until about your child turns 20, so that it matures into their full tuition and the amount that you can use. That'll be a good idea also, because then that takes away that liability from you in the future. It gives you that opportunity to then free up to free up a lot of your future cash flows and your future savings. But that, you have to have foresight for that. The only concern I have, Vernon, is, are people operating with foresight, or are they operating in plain sight? Remember, people, there are three levels of sight: plain sight, insight, and foresight. It appears there's a lot of plain sight spending. I don't think there's a much insightful, and we're not sure whether it's foresight. But I say it again, all the best to everyone. Hopefully, the Spirit of the Lord will guide you in your endeavors. Let's get into today, Vernon, and get into the markets. But yes, the first story was 1.9 billion kwacha. Futuristic Friday is upon us, people. Let's get into a market roundup. We have seen that the kwacha is now interbank rates trading at 17.9236. We are seeing that about 0.28% up. Remember that the kwacha year to date is now only down. Oh, sorry, the dollar is now only down 0.94%. This is what we're seeing in terms of the FX rate. It has started to reverse, obviously, because of the movement of dates when it came to the when it came to looking at the creditor committee. Though the president, I think, at the launch of the delivery unit, did have a few choice words to say when he was saying that he did push the ST and the Minister of Finance to actually start having meetings now. So I'm just going to quickly play the clip of what he said. That might end up giving this a little bit of resistance, but I don't see this yet playing out. I'm not sure it's playing out yet in the market because people, I think, have heard too many statements and they're not really reacting to it. So here's the president making a statement regarding it.
Sitting in the official credit committee, and we have lobbied around globally in the night. Myself, I've been calling presidents in the night to make sure that the official creditor committee meeting takes place today, Thursday today, and not in May. Because my mind is clear. If we don't take out this debt overhang, it will be very difficult to restructure this economy.
So I think you saw that he has pushed it, and you could see he was serious, Vernon. You could hear how he kept on hitting his finger against the table. And somebody's hitting their hand against they're serious. That was last week, so we're not sure. We haven't really gotten any feedback regarding the outcome of the creditor committee meetings that were happening and whether any credit proposals are happening and whether the restructuring will be met. Because remember, China still has to agree to they have to agree to the structure of the restructuring before we actually implement a restructuring. My goodness, it's like running through a loop. So yes, that was some of the news that has hit. Stock market did move up anyway yesterday. We just saw it still at 8,095, still at all-time highs. We're still up 10.28% year to date, 7.32% year to date. Bond index moved up by 0.6%, but moved down in dollars by 0.27%. This was yesterday as we close out the market on the 4th. Now we are seeing that the FX rate in terms of the rand is still up 0.9834, up 0.54%, and up 2.2% on the week, but still on the month down 18%. So that's pushing down remember the cross-border traders who go to South Africa to buy things. Therefore, the cost of the things that they need to buy will be coming down. Because of that. So that means that they can pass on some of that lower cost of things through the consumer. So that's just something that we'll be eagerly awaiting. We're also looking, by the way, in terms of the first market read, we've seen that the RSI reading has moved from an oversold dollar to a selling dollar, meaning that it's moving out back into the buying range, the neutral range. So it looks like neutral is somewhere between 18 and 19. That's where neutral in terms of the FX rate should be found. Now, in terms of the bond market, as we said, this is what we've seen. Interest rates did not move at all yesterday, so I think they've stayed relatively flat. Now, looking into commodity markets yesterday, we did see that everything across the board did move up simply because of the Federal Reserve's announcement that they are planning on transitioning into cooling off or pausing the interest rate hikes, while the ECB also announced the same thing, that they are pausing into interest rate hikes. Therefore, even in our wealth insurance assets, we're also seeing that cryptocurrency was up 2.7%, Ethereum was up 2.4%, gold up 1.42%. Year to date, we've seen gold up 11.67%, cryptocurrencies back up to 72%, and trading above the 500,000 handle. This is what we're seeing in terms of our assets, our broad asset outlook. Sorry, this is meant to be the 4th as of yesterday. 9.6% up on bonds, 10.3% up on stocks, and 11.7% up on gold. So we're getting this broad asset movement. And if we're going to see a pause on rates. Now, one of the things that did concern us yesterday is we did see short-term interest rates for America in terms of the 4-week and the 8-week treasury bills come in above 5%. in 5% annualized interest rates. So yesterday we did see data coming out of the markets. Our four horsemen are showing us that EU PPIs did slow down, did continue going into disinflation of 1.6%, while unfortunately inflationary hurdles are showing us that South Africa's PMI is still deeper in contraction. It's actually gone deeper, and therefore that may prove that South African manufactured products may come out a little bit more expensive. The EU raised interest rates by 0.25%, and 4-week and 8-week rates both came in. 8-week rates in the US both came in above 5%. However, German trade balances came in about 0.6%, and US job cuts did decline, but non-farm productivity went down by 2.7%, and jobless claims did rise, while the UK, EU, and German composite PMIs came in stronger. So we are seeing a mixed read here. Industrial sectors that are suffering. So all the data is all over the place, and maybe what's driving the whole conversation, Vernon, at the moment is the banking crisis. PacWest was the latest bank that gave bad earnings and then sent everything into a tailspin. So in the main news, we don't have anything in the country centrally. We did see Nigeria's government Nigeria's parliament did approve a national blockchain policy. If you're looking there, blockchain technology is set to be a $1.7 trillion industry globally by the year 2030, making up 4% of the global GDP. And Nigeria has actually run in quickly to start creating a blockchain policy because their people are utilizing it. A Reuters poll is actually showing that copper is expected to rise very soon, but it is battling weak economic conditions and weak economic data coming out of China. A pause in the future rate hikes has also pushed up gold because there's the fear of a recession. We're also seeing that PacWest gave poor results and then driving regional banks to sell off. It was driving regional banks sell off of stablecoin balances and centralized exchanges. This is actually what's happening as well. The ECB is also signaling that it will slow down the pace of rate hikes, but it will continue to hike rates as the 20 nations across the EU are still seeing stubbornly high inflation. Finally, we're seeing, as we said, stablecoin balances are selling off. Oil continued to tumble down on the week on weak manufacturing data and also China. So this is some of the data that we did see, but we did see oil pick up slightly today. Now, in our deep dive, Vernon, we did see yesterday, we got some news live on Money FM website. Please go and check it out. We did see ZDA did say that they've seen 81 investment pledges valued at 8.57 billion kwacha in quarter one. That's 3,000% higher than the year before. But that's mainly driven by the fact that there are three main pledges that we've seen this year from the UK, the EU, and the UAE, all amounting to $8 billion worth of renewable energy pledges for solar and other renewable energy sources. So those are the three. They're making up about 94%. Those are the three energy deals that we've gotten this year. The 81 pledges apparently are likely to cause 13,435 jobs compared to the 4,829 jobs recorded from the 74 pledges in Q1 2022. By the way, Vernon, just to remind people, there are 250,000 to almost 500,000 kids who enter the labor force every year. So 13,000 jobs ain't much, people. That ain't much compared to the 250,000 to 500,000 people that are entering the labor force every year. We really have a deficit. This is why we always have to push up SME policy to try and help small businesses grow as fast as possible to absorb a lot of the slack in the labor market. Outside of those energy deals, however, Vernon, the remainder, 540 million of those of the Q1 2023, 540 million in Q1 2023 pledge values are still 25% year-on-year higher than the $240.13 million worth of pledge values from last year. So we are still seeing significant investment improving, by the way. We're still seeing significant improvement. Other story that we saw yesterday is that the Minister of Trade and Commerce did instruct the new Zambia Compulsory Standards Board, to adopt a more light touch to regulation and be growth supportive. Here are two statements that he made. He said, you must support the businesses to thrive and not choke them. As you interact with companies and business owners, ensure that the entities repent of their ills and get to a point where they can support growth. He also said, as you regulate industries, do not stop erring entities from performing, but tell them to do the right things. In the event you find a company that is producing many products and one of them is found wanting, do not shut them down. isolate the defective products, and let the business continue. Can the church say hallelujah? And my brother Vernon say amen.
Amen.
This is what we've been talking about. Regulation does not mean shutting people down. It's almost as though the regulatory authorities of this country operate with a bitterness. Okay. Unless, yes, some of these things like online farming schemes, those things have to be stopped. Yes,
Mhm.
those things need to be stopped. But in general, when you see, because I've seen this before, say somebody is producing, I don't know, banana wine or something, they'll shut the whole thing down. Okay, and this is what we've said. Those were, I remember, my concern was those were young students who were trying to make a living. And yes, we're not saying they should become drug dealers, but what we're trying to say is that they went out of the way and they created a manufacturing plant in the back of a university because it was too expensive for them to get a loan, because regulatory licenses were annoying, and because the time it takes for the people in institutions to turn around licenses and documents was too long. Okay. Then we saw students who knew they were never going to get employed in this job market, where we're only creating tens of thousands, at best 100,000 jobs, while 500,000 people are entering the labor market every single year. They knew they were not going to get employed. They resorted to producing and creating a business. And what did we do? Our bitter regulators, who have no business acumen, decided we're the only ones who are allowed to be highly paid in society. So we're coming to shut you down. That's the way that we operate in this country. Okay. And this is the problem. Many people who operate in regulatory institutions have got a bitterness towards people who operate businesses. It's like it's almost a vicious anger, and they have to cool off on that. Yes, you should protect society from wrongdoing. Nobody has talked. I said it before. When you see a Ponzi scheme happening in town, it may be a good idea to shut it down. Though, Vernon, even when it comes to Ponzi schemes, I do still believe some people need to learn. Okay, people need to learn. Okay, in as much as yes, it was a good idea for the institutions to step in before it got worse. People need to lose money to those things. No, because they're saying no, but why didn't they step in earlier? Why didn't you think earlier? That's my question. Why didn't you think? Why do you want them to step in? Why don't you want to think? Okay. You knew that those rates of return were too good to be true. Everybody keeps giving you seminars on how to think. Even the Securities and Exchange Commission has just recently hosted a seminar on their page about how to spot these things. They spend hours putting together content. They deliver. They broadcast it. A handful of you people pitch up, and then thousands of you go and continue getting scammed. Why? Because instead of getting information so that you can make better decisions, you go to the excitement of gambling. Well, good luck. You've lost your money. Okay. So that sometimes I believe that even the regulation needs to allow people to burn their fingers a bit. It needs to allow them to burn their fingers because they need to learn that how to actually make. You know why I'm saying this, Vernon? People act like they're not adults. Okay. They act like they're not adults. So it is a request to the regulators of this country to first prioritize job creation. Zambia needs jobs. Okay. Yes, you want quality control, but first we need jobs. This is why China allowed for things to grow without regulation first. Then afterwards, they said, okay, now you can proceed. Now we'll step in and regulate. Now that you've all gotten rich and things are big, and now they need to be managed. But at the beginning, China said, let's let things run free first. Let's let them grow. Let's let them make mistakes. Let's let things collapse a bit. Let's allow things to fail a bit first. And let's let these people get more resilient and learn from failure. Now they're stepping in for consumer protection. In Zambia, we regulate before. And I want people to think about this, Vernon. Do you know that in the 1800s, when John D. Rockefeller became a billionaire, do you know that there was no Department of Energy and there was no Energy Regulation Board to oversee the standards of his operations? There was no regulators. Do you know that in the 1600s and 1700s, when Britain was going through the Industrial Revolution, there was no regulators? Do you notice that the countries that have built wealth built it without regulation? Then their wealth grew when the regulators came in at the point when they were consolidating their wealth. This is the problem of why people say, how come Africa struggles to create jobs for its people? because Africa puts first world regulation in a third world economy. That's what happens. So you have to move away from over regulating infant economies because you're prohibiting growth. That is what people need to understand. Okay. That is what people need to understand. You're prohibiting economic growth when you are over regulating. Now, now we have a question here, and I just want to quickly ask it. It's got to do with this. Daniel is saying, could it be that Zambia is a very highly vulnerable and deep in poverty that such schemes thrive in? Yes, they do. Unfortunately, they do. But it's unfortunate that information, just proper information, never seems to hit the ears of people. In fact, most of us who actually do uh, proper like advice and talk about proper assets, people will tell me that a farm scheme is a legit investment and a government bond is a scam. That's what they'll tell me. Okay, because the government bond takes too long to make them rich. To them, the things that take too long to make them rich are a scam, and the things that they can do overnight are not. So this is the problem I have, because even when you try to educate people, they resist it. So I think, yes, unfortunately, yes, that is the case. But once again, bad situations have to come. If you read Dumisani Ngube's book on the his story, the radical entrepreneur, he talks about bad investments that he's made. He talks about losing money in the tomato farming venture, and he learned a lesson. Okay, he actually learned a lesson, and he built himself back up from that. Okay, it's actually a very good story about learning from a mistake and being able to own a mistake and to learn from it and move forward. The only problem I have is, do our people do that? But the main point, going back to the story that was at hand, is that our minister of commerce is busy telling them, don't kill the business, help them correct. In fact, here's what I would advise to anybody: if we're going to start talking about standards in this country, bureaus of standards and bodies and Zambia compulsory standards, here's my advice: why don't you give entrepreneurs a course on how they do it? Instead of imposing standards, why don't you educate them on how they could hold up standards? Okay, but also be conversant to the reality that capital is not distributed in this country equally, and that people do not have the adequate business experience, and they need to go through it step by step for them to be able to get there. So that's a bit of the news that came out. And part of the international stories that came out today, Vernon, is Charlie Munger, 99 years old, and Warren Buffett, 92, turning 93, are set to face Berkshire Hathaway investors for their 59th AGM for the 2022 AGM during a time of economic turmoil. Warren Buffett and Charlie Munger are set to do a marathon 5-hour session of answering shareholder questions. See, the way they do it, whenever Berkshire investors come, like 10,000 people are converging on Omaha, and they're coming to now hear from these people. So it becomes like a big tourism event for them. Buffett may be asked to address the US bank seizures because they do have strong banking stocks. So his statement is going to be quite important. And shareholders are also due to bring six proposals to be addressed, including climate change, diversity. What's with these diversity people? What's with these diversity people? Why is everything activists? I don't understand this activism thing. I think it's become the new badge of honor. Okay, everybody, people are not industrialists. They'd rather be activists than industrialists. Like, people would rather hold placards up than actually make the placards. That's the problem. Like, make stuff, people. Don't just be activists. Anyway, diversity, political advocacy, and Warren Buffett has actually rejected all of them. He said, "This is all not. This does not count here, people." The people have also asked for his succession. Berkshire Hathaway has had a succession plan since 2008, where Warren Buffett has actually stated that should his mental capacity decline, then he will actually step down. He's actually said this before, and he said it many times. And quickly, Vernon, let's get into our chart of the day before we get onto the other side of things, onto our news. This is from the World Economic Forum's 2023 Future of Jobs report. Vernon, I'm going to ask you a very simple question before I go through this on the other side. You're going to be employed. You're employed. You're a young man. Have you read what the future requirements of the working world are going to be, or are you just kind of winging it, man? Because
You
most
see,
people don't read this stuff.
I try to be. They, they don't, unfortunately. But I choose to think steps ahead, and whenever I engage into something, I try to project what that's going to be like, how responsibility wise, how much it's going to require of me, and understanding how dynamics are like. I was actually looking at a movie, Artificial Girl, I think, if I'm not mistaken. These people were able to create a human being total with feelings and whatnot. And as the movie was actually unfolding, it was even becoming weird, and I was getting more concerned. If someone can actually create a robot and literally make every feature like that of a human being, then this particular robot can do pretty much even more accurately than one of a human being, because there's a database, has a memory, has a storage space, and there's that efficiency when it comes to that. But then a human being, we like here and here. Of course, we are efficient, but we're always lagging behind here and there. But that gave me a thought. These jobs we have today, we have solidly but just relied on entirely, maybe even for just one particular income. Come in the next 4 years, is there still going to be a space for you about that? And I'm figuring what best way could I be able to remain relevant in the system. Not only as you're growing older, you are becoming less energetic and less creative, but also the world is changing so much that your ability needs to really prove that they are relevant, and that is you seeing how you can marry them with the current times. And I was having a conversation with some individuals, I think about a day or two about parenting, and it was about parenting now and then is different given the dynamics and of course semantics on the table. And of course it seemingly will be the same as well in the few years when it comes to work. The work industry is going to change, and you have to be aware of what is on the ground in the work industry, and are you going to be fit? Are you going to be able to fit in? Are you still going to be relevant? And how do you make yourself relevant? Of course, times are changing, and if you still stick around with the old ways of work, I'm afraid those jobs will be taken away soon.
And we will take a brief break to go through a quick. We'll take a brief break for now, and we will return back on that thought.
And thank you so much for
So
holding and still sticking around for the last session of Behind the Markets.
So here's the interesting question here, and we even had one comment here from Rodwell Chanda, who has actually said Zabs charges 5,000 to get a license for an SME. Imagine. So let's have that. Okay, if you're the average SME starts with a budget, and this is according to two surveys. The average startup is funded by 5,000 kwacha of capital, ranging up to 100,000. This is your range, okay? But the median one, we did a Money FM survey where we did hundreds of businesses and we found that 5,000 kwacha was the starting capital point that people started businesses with, okay? 5,000. So if the ZAB's license is 5,000, that means that's your whole startup budget gone, okay? No inventory, no marketing, nothing, gone. So this is why I keep saying one of the tax proposals that needs to be put in place should be the UPND graduated tax proposal, which they made in 2019. I don't know for the life of me why nobody can hold these people to this. Okay. There was a, there's certain things, there's certain campaign, you're quicker to hold these people to a NAPSA withdrawal than the actual thing that's limiting you from making money. You withdraw your NAPSA, you're going to finish it, okay? But when they said that people should be given a year free, no licensing costs, no regulatory costs, and no tax liability for the first year. In the second year, you only pay 25% of anything that's due. So let's say this is a 5,000 kwacha license. For your first year of business, you should not have to pay it. In the second year of business, maybe you pay 1,250. In your third year of business, 2,500. In your fourth year, 3,750. In your fifth year, 5,000. That's the way it should be. Okay, they made that campaign promise, but nobody, when it comes to the promises based on making money, there's nothing. No one is saying anything. But when it comes to the campaign promises on spending money, everyone is vocal. You see the problem I have with the citizens. This is why there's an old Arabic saying, Vernon, that says, you get the politicians you deserve. Okay? Because the politicians are a reflection of the mentality of the people of a country. And look at that. You're pinning them to the spending promises, but you're saying nothing about the making money promises. Where are the business promises, the investment promises? Those are the ones you should be holding them to, because those are the things that are going to now, they're going to reverberate into your ability to make money going into the future. So it already speaks to the priorities of what is between the ears of our people. Okay. It already speaks to the priorities of the country, because this is the first thing that should be dealt with. This is the first thing that should be dealt with as a country. Okay, and we actually have people saying, yes, we do need to try and fix this. Now, in terms of the chart I was going to show, Vernon, you were told that do not fear do not fear AI, Vernon. This was a statement to you, my brother. Do not be afraid of AI. It's not coming to get you. It's a tool. You have to know how to use
No,
it.
it's not
So,
really being afraid, but I would say it's
I know.
it it's I would say it's a matter of preparing yourself. You know, you don't want to be caught off guard and you look surprised and everyone is moving forward and then you're jobless. You know what I mean? Yeah.
So here is this upskilling point here on the World Economic Forum. Please, people, download. It's a 230-page document, yes. But if I told you that if you don't read this, you are likely to be unemployed, okay, within the next 5 to 10 years. If I told you don't read this and you're likely to be unemployed, what is 230 pages, Vernon? If I told you your job is on the line within the next 5 to 10 years and you can find yourself returning to the land if you're not careful, okay? This is the reality, especially all of us who work in urban, higher educated, professional settings. You need to read this document. Okay, you really, really, really need to go and read the World Economic Forum's Future of Jobs Report 2023 to 2027. It tells you what skills are going to be required, what's going to be happening in your industry. Please, 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 people, pay attention. Anyway, this is one of the charts I got from them to be our chart of the day. It's the percentage of people. This is a breakdown of people by what kind of training they're going to need to be able to stay employed. What you're seeing here is 39% of people will not require training before 2027. 18% of them will require upskilling after 2027. 16% of them will require reskilling. So in other words, you need to retrain yourself in your craft because new technology has come out. You need to also upgrade your skills. 18% of them, 18% of you will need to upgrade your skills. 16% of you will need to retrain and refine your skills. 12% of you will need to training will be needed but inaccessible until 2027 for 12% of you because most of the technology has not been developed for it, and training will be needed but will not be accessible in any foreseeable future for 15% of you. In other words, you need to invest in short course training. You need to start looking at what is the technological trends happening in your field. What are the things happening? Do not think this is not coming to Zambia. You have seen, I keep giving you people a warning, you have seen banks closing. Okay, and not closing, sorry, banks not opening branches. They open one mega branch and all their minor branches are shut down. Why? Because now they're working with agents, they're working with mobile apps. People, that smartphone that's in your hand has destroyed bank branches because everything that was done in the branch is now being done on that smartphone. And a lot of people have got access to smartphones now. Smartphones are now just somewhere around 1,000 kwacha, some of them even 750. And a lot of people are having access. Like a lot of that NAPSA is probably going to phones. It's going to phones. Let's not lie to ourselves. A lot of that NAPSA is going to phones. So there's going to be a lot of smartphone accessibility, and there has been. Look at the amount of people, Vernon, who are able to use WhatsApp. Just look at the quantum of people who have access to WhatsApp in this country. So already it gives you a signal that there is change happening. Wamba Moses, I think, was asking what is the name of the document so that we downloaded. It is the World Economic Future of Jobs Report. Okay, they do it every 5 years, but they did a special one this year to try and help people get a hold of what to do. I'm actually going to do everyone a favor. In fact, I can't do it. Yeah, I was going to do a favor and give you the link, but I'm going to give you the name. It was published just a few days ago under their WEF reports, and I'm going to put the name in the comment section for people to be able to utilize. So please do it. I hope as many of you will do it, but please do it. It is for your own good. It's exactly what you need. It'll actually improve your capabilities to operate in your industries. So that is the major concern I think I have for everyone here. Now, Vernon, I just want to quickly go through one model for the business sector into our topic of discussion. What are the things that VCs look for in a business? There's a lot of conversation, Vernon, that people are looking at in terms of what we call an investable business. NFX VC firm had actually created what we call the ladder of proof that makes your business viable. Now, these were multiple things that that some VCs saw, but the ones which you can see highlighted forward are the ones which most companies are looking for. First thing they're looking for is rapid sales growth. Can you show that your business is growing 20%, especially if you can grow your business about 20% a month? If you're starting a business, are you able to grow it about 20% a month? Okay, in terms of sales, rapid sales growth is really important. But somewhere around 10 to 20% is what you're looking for. Unit economics is another one that's most important. How much money do you derive from repeat customers over the lifetime? Look at what is the what is the total lifetime spending of your customers, and what is the percentage churn rate? In other words, what is the percentage of customers that leave your services? That should be 3 times more than your customer acquisition costs. Okay. So that's an important one as well there. Finally, the other things that we should be looking at here is, do you have paying customers? I think that's the first one. Before you go to someone looking for their money, this is a problem. A lot of people raise capital without paying customers. But the reality is most of the people, the capital providers, are saying, do you have a steady stream of growing paying customers? If you don't have a steady stream of growing paying customers, then perhaps you cannot be financeable because you're too much of a risk. You haven't proven your business. You haven't worked out the kinks. You're experimenting with other people's money, and nobody wants you to experiment with their money. Go and experiment with your own. That's why friends and family and personal savings make up 70 to 80% of startup capital in this country. The next thing that they're obviously looking at is, do you have a good idea and do you have a team? You know why a team is important, Vernon? If you can convince people to join you on your mission, then at least it says some people are willing to sacrifice going out into the world and looking for jobs, and they're willing to now come and work alongside you in your business mission. So look for these 5 factors. Ask yourself about your business. Have you created rapid sales growth? Have you got good unit economics where the cost of acquiring a new customer is a third of what you're going to earn from that customer over a lifetime? Do you have paying customers who are paying you consistently, at least monthly, quarterly, at best, if not annually? Do you have a good idea? Have you fleshed this out and tested out? And by the way, the premise of a good idea is that people are willing to pay for your services. Are you able to make money off your idea? Do you have a good idea? And do you have a team that is able to grow it? So people take a look. And when I say good idea, also, by the way, Vernon, they're looking at, have you timed it to the market? Is it a good time for the product to come out? In other words, is this a time where are you trying to release a mobile app when Zambians don't have smartphones? Or are you releasing a mobile app when most Zambians are growing in their smartphone usage? That is what we're talking about when we're talking about, do you have a good idea? So those are, Vernon, some of the things that I would like people to start looking at, especially if you're running your businesses. And if you're trying to look at whether to withdraw your money, these are some of the things you should look at even in your business idea. Work these things out before people you utilize that money. But for the 2 billion kwacha that has been released, it's probably too late, Vernon. It's probably too late. So I will leave it here today. Next week, we'll be going into the mindset of essentialism, where we will be talking about focusing on the things that really matter and drilling your life down to the importance. That is the mindset we're going to be talking about. It's going to be governing most of the business conversations and investment conversations of the next week. With that, my brother, I wish you well. And to everyone, have a good weekend.
Thank you. Enjoy the weekend.